行业深度的一个探讨。我是瑞银证券瑞银大中华区研究部总监连佩坤大家也可以叫我 Eric。那接下来呢，我们的安排是这样，我会先用英语和我那个海外的分析师 Graham 做一个交流，然后呢交流完以后，我们还回到中文现场跟我们中国团队的分析师邓军进行另外一个交流。那我现在就会把时间转英语。Okay, so good afternoon, everyone. Welcome to today's WIND webinar on the UBS outlook for 2025, and specifically, we're going to focus on global and China MedTech. This is Eric Lin, head of UBS Greater China Research. Today, I'm pleased to have Graham Dao, head of UBS European MedTech Research, and also Jun Deng, UBS China Healthcare Analyst, to join us on this webinar. So we will discuss about the rise of Chinese companies in global MedTech market, as well as the implication. Also, the latest development of China MedTech equipment renewal program. Graham also recently published a UBS Q series report, Dragons at the Gate, who will feel the heat. And I have several questions for you, Graham. Welcome. So first of all, why don't I ask you to quickly maybe spend a couple of minutes talking about the report, I think, and more specifically, my first question is within medical imaging and patient monitoring, how have domestic Chinese players managed to compete on par or even exceed the Western peers? Over to you, please.
Perfect. Yeah. So and hello, everybody. I will just touch on the sort of background to this report, and myself and Tyra will touch on the key findings, and then we will tackle the all important question. So one of the reasons for writing this report is medtech, global medtech is viewed as a very boringly stable industry, and that is its strength. The fact that it's so hard to disrupt. If you are going to disrupt this industry, you typically need a lot of capital, and you need to be willing to bear a lot of losses in order to do so. We believe that there are certain Chinese companies that are very uniquely positioned to actually disrupt the market in certain key markets. We've worked with Jun on this, and we've used a lot of external data, including joint chain data, spoken to well over 20 experts, both in Europe, the US, and in China, to come to our conclusions, and have leveraged what we call a 6-stage framework to assess which segments of the Chinese medtech industry are ready to disrupt not just the Chinese domestic market in terms of taking share from Western players, but also exporting and taking share in international markets, primarily Europe, but also the US. Our key conclusion is that in medical imaging, so CT, MRI, X-ray, where GE, Siemens, and Philips are the big players, that is a market where Chinese players can disrupt. And then also in patient monitoring, it's also a market where we believe Chinese players can disrupt. I'm just going to pass over to Tyra just a little bit to explain the methodology in terms of what we did.
Thanks, Graham. So it's a huge piece, but just for now, I'm going to answer the key questions that you as investors will have. First of all, why isn't medtech disruptable? So the crux of our view is that being innovative is not enough. You need scale to make profits. And to get this scale, you need to bear years of losses as you invest in dozens and dozens of product launches, manufacturing facilities, and R&D infrastructure. And we've never seen such a case study in medtech. Now, how is China different? China supports the emergence, incubation, and profitability of its domestic players like no other medtech market we've seen. In essence, it does this by A, redirecting historic Western company investments to allow Chinese companies to scale up rapidly in R&D and manufacturing, and B, the Chinese government redirects revenue and therefore profits from Western players to Chinese companies. Now, we test this through a 6-stage framework, which assesses how far along Chinese disruptors are within certain medtech markets. We've already seen a case study that fits perfectly. This is BYD in the electric vehicle space. BYD started with a relatively narrow product line and just 1% market share outside of China in 2021. It now has around 10%. We've looked at several medtech industries, but why does medical imaging and patient monitoring stand out to us? Our analysis shows that 2 Chinese competitors are in the final stage of our 6-stage framework and are starting to parallel BYD. This is United Imaging and Heavy Imaging, so your CT, X-ray, and MRI machines. And secondly, Mindray and ultrasound and patient monitoring. For context, United Imaging's market share in China has grown from 3% to 13% since 2019, and Mindray is already at 30% in its respective markets. These companies are beginning to expand internationally, and we think real product quality is there, and price is up to 20% cheaper. And by expanding internationally, these players are going to be able to take enough share to lower imaging and patient monitoring market growth for Western players from 5% to 3%. And now, what should investors do? Back to Graham for this.
Thanks. Yeah, so I think to the question Eric put in terms of how have Chinese players managed to compete and what does that really mean? I think it's really important, and we've had pushback on this. I think it's really important to note the quality of product from Chinese companies has not only gotten much better, but is at a point where there are vast swathes of the portfolios of the 2 companies that we look at, so Mindray and United Imaging, that are on a par with the Western players, and actually in some cases better. So if you focus on Mindray and the feedback we had from hospitals, particularly in the US, which is actually the hardest market to challenge because Europe is very much a price-driven market. We are just cheaper, and we prefer lower price products. We are willing to sacrifice quality on that basis. The US much less so, given the nature of it being a privately funded market. When we spoke to hospitals about ultrasound in particular, it's become clear that Mindray is viewed as almost just a 4th player. So a 3rd player. You've got GE and you've got Philips. To a lesser extent, you have Siemens there. And now you have Mindray as a viable option to actually contract the majority of your portfolio with. And an interesting point was made by one of the largest hospital systems in the US to us, which was when they switched out from, in this case, GE to Mindray for the majority of their portfolio, they kind of phrased it as, we had the same number of complaints we would have gotten if we switched to Philips. So there were certain weaknesses. So they pointed out the breast screening portfolio of Mindray was a little weaker than they were expecting. But then on the other side, the portable ultrasound portfolio was much better than peers. So I think from a Mindray perspective in that category, clearly a competitive player already. I don't think innovation is lacking there. On patient monitoring, I think the sense we got is that the hardware is quite strong, software maybe slightly behind the Western players, but as a bundled portfolio, the strengths and weaknesses are broadly balanced, and again, at the right price, can be competitive with European players. United Imaging was a little bit different. So within China, where it's really made inroads at the moment, the quality of the lower and mid-price products is seen as broadly on par with Western players. Software may be slightly further behind than some of the Western players, so particularly Siemens Healthineers. But worth bearing in mind, Siemens Healthineers is your best in class, and then you have Philips and GE, where actually United is seen as being relatively competitive. In terms of innovative products coming through, what is interesting with United is it looks to us like they are pursuing a high innovation strategy. So it is not just a low price strategy. And I think that's what's moving the dial when we then look internationally and the reputation of the business. So it still remains quite small outside of China in terms of sales exposure. But the feedback we got from European and US hospitals is that actually in certain product categories, primarily CT, but also molecular imaging, there are some very good products in United. And the way it was phrased to us is part of it's that it's cheaper in terms of what attracts us to it, but it's also that you have the potential to be getting a better product for cheaper. So you can get a lot of the extra features that you might not get with a Siemens or a Philips product unless you pay quite a bit more. So there's still more room to go, in my view, in terms of building out the broader portfolio for United so they can bundle better and engaging with key opinion leaders to build that reputation within Europe. But I have to say, I was surprised by the strength of the positive feedback on both players. Notably, the fact that Mindray seems to be largely there in terms of product quality. on a competitive basis, and United, the speed of improvement is there.
Sure, thank you. Maybe just to follow up on what Graham and Tara just mentioned, right? So how does the tier hospital system slot into your hypothesis?
Okay, so I'll take this one. In China, there's a tiered hospital system, so 3 tiers, with tier 3 being the large metropolitan hospitals. Now, each tier of the hospitals is designed for a different purpose. So you can't have a tier 1 or 2 hospital, that's your community and rural hospitals, performing the functions of a tier 3, a large metropolitan hospital. And that naturally flows over to the equipment within the hospital. So even if a tier 1 or 2 hospital were offered a photon counting CT, for example, that's a really high-end CT machine, they would not be able to accept it. So that's not their function. So with the Chinese government outlining midterm goals, like in the Made in China 2025 plan, to better fund these community and rural hospitals, and more are still being built. And going forward, with these same hospitals undergoing VBP, we have to recognize that at least some of the future growth will be falling to domestic players over Western players in the future.
Cool. While I have both of you here, maybe aside from medical imaging and patient monitoring, are there any other industries that you cover that you find it interesting?
Yeah, so I can take this one again. Our main focus has indeed been imaging and patient monitoring. We believe this subsector has been viewed by the Chinese government as one that's worth going after. Think it's the core infrastructure of hospitals. It forms a really sizable market, and therefore it facilitates internationalization. There's also an element of engineering excellence here, so that can be achieved with kind of enough spend on investments. The more you spend, the better you get. In the note, we also looked at orthopedics, dental implants, and hearing aids. However, for each of these, we believe there are limitations to each of the industries that might indicate a slower dynamic or kind of render a similar dynamic unfeasible. If I go through one by one, for orthopedics, we believe the market in China is not big enough to support the investments needed for material internationalization, particularly having shrunk in size after VBP policy. For dental implants, we see some potential, but we view this as more of a 5-year story before domestic Chinese players can catch up to Western players. And for hearing aids, we believe that domestic Chinese players don't have the necessary technological capabilities at the moment to compete with Western players. The hardware's there, but the software, it's not quite there. So it's prudent to keep an eye on all these other sectors, but we still retain our focus on imaging and patient monitoring in particular for now.
Sure. I think geopolitical risk is one concern I'm sure you heard from investor, right? So should this be something we should worry about? Let's say additional investigations?
Yeah, look, the way we frame it, it's reasonably straightforward in that you can go, what's happening in the US and what is happening in Europe. I think it's easier to deal with the US first because I mean there are sizable tariffs already in place, and those tariffs, when you look at particularly United Imaging, have made a difference to their strategy. It looks to us, and having spoken to the company, they have pivoted away, so they're less focused on the US and more focused on Europe, because the tariff does cut out a chunk of the cost benefit they provide hospitals in the US. Mindray are still competing and still are viewed by hospitals as being very price competitive. So I think there's been less of an impact there on the tariff side of things. Probably, it appears to be the case that we should expect companies have yet kicked in or had an impact. That might change the game there were something to happen. But ultimately, our analysis and our expectations around market share gains outside of China assume almost no gain in the US for United and Mindray, which may well be too conservative. But I think there's plenty, as I had to explain to a few investors, whilst the US is very important, it is only 40% of the market. There's still vast swathes of the market outside, which outside of the US that matter. And one of the reasons I say that is because when you look at Europe in particular, price really, really matters. The funding mechanism for European hospitals is almost all via government funding. So you are set with a budget which is always constrained on capital equipment, and you are looking for the best value for money primarily. You do not, the vast majority of the market in Europe in terms of value is going to be in the mid to low price segments for medical equipment. So price, very, very important. When you think of the tariffs or the discussions here, there has been some discussion, quite mild, but there was some discussion earlier this year around medtech and primarily the pressures of VBP and how that's been applied to European companies. So within the EU, and I think that caused some concern. There may be tariffs or trade barriers put in place for Chinese companies operating here. I would just say on that a few points. So firstly, Western companies or European companies are not supportive of this. So they don't want tariffs like that. Mainly because they generate significant profits from China. So on my numbers, close to 20% of the companies we discuss here, so Siemens and Philips, would be coming from China. So if there were tariffs put in place by the EU, which can often take a long time, if there was retaliatory tariffs then put in place by the Chinese government, that would be a very big issue for the industry. So I think that would not be welcomed by the industry at large. And then secondly, if you can get a steady supply of competitively priced, high quality products, which both Mindray and United offer, it's very unlikely in our view that is going to be turned down by European national healthcare systems, given primarily the labor capacity constraints. We have a fairly old installed base of equipment, whether it's imaging or whether it's patient monitoring, and that is creating demand to replace that. But also we have a very tight labor market. So if you can get more efficient products and more efficient technologies in place at a very good price, I think that's going to outweigh any concerns around what ultimately is a relatively small employer. The key parallel here is if you're looking at the automobile industry where there have been tariffs and the EV segment, that is a massive employer in Europe. The med tech and specifically the imaging and patient monitoring industry, we've really got two companies. Siemens Healthineers is a big employer in Germany and Philips is a big employer in the Netherlands, but I don't think either are particularly keen for such tariffs. So ultimately, I think the scope for growth and share gains in Europe remains.
Thank you. I think that's very clear. Before I let you go, maybe just the last question, because I know this Q series report actually came out a few weeks ago, and you guys have been marketing, right? So what has been the feedback so far? Any pushback?
Yeah, look, the feedback has been very clear, and it's geographical. So within Europe, we've been right across Europe in terms of meeting investors. There isn't, so the broader thesis, the idea that a United or a Mindray can come and take international share and has great products and can continue to develop great products, that is generally accepted as pretty viable and something that is likely to happen. The degree to which that happens is up for debate, and who might lose out is up for debate. But European investors tend to agree that that's likely to happen. And for those who have global investor mandates, we're definitely seeing an interest. I'm sure John has seen this too in terms of, well, can we invest in these companies? Because it sounds like that's, if there's disruptors, you typically do quite well by being invested in them. So we've had that side from Europe. The US is different. We've had a lot of pushback on our view in the US, and that really stems around 2 points. So firstly, geopolitics. There's an assumption that tariffs will reduce the competitiveness of Chinese companies, which again is a fair point, but we think limited to the US. And then the second point that is made to us by US investors is around quality of product. So the idea that Chinese players are merely copying Western technologies and are therefore behind. I think that's unfair. I think we have more than enough case studies in other industries to show us that product quality in very highly technical areas has started behind, caught up very quickly, and in cases, gone ahead of some major Western players. I think Mindray is showing you that, and there are categories where Mindray have products that are better than or market leading. So I think it shows you the geopolitics and how that affects people's perceptions, given where European and US investors stand. But ultimately, I would say that is the real differentiation between those. And interestingly, there is more interest as a result of this in investing in these Chinese companies.
Thank you. Unless there's anything else, thank you so much, Graham and Tyra. It's been very helpful for both of you joining us in front of a Chinese audience. I'm sure we will find it a very valuable insight. That's all we mean to do, right? UBS Global Research. So thanks for the time. Now I'm going to switch back to Chinese. 那接下来我就还是回到中文因为我要访谈一下我另外一位嘉宾是邓军，是我们瑞银证券的医疗器械行业分析师。那可能最近大家还是比较关心的是回到国内经济这个刺激的政策对整个医疗板块的影响，因为还是专注一下你的那个医疗设备这个板块，因为你来和大家分享一下最近大家对于那个政策有什么解读，好吧？
好的，谢谢 Eric 那非常荣幸能够在这里和这个投资人进行交流那首先的话，我们觉得呢，就是虽然今年国内的这个经济刺激政策是今年中国医疗设备行业的关键投资主题之一但我们认为考虑到3个主要的因素今年的这个刺激计划可能会达不到投资者的预期。第一，与上市公司在今年上半年提供的这个指引相比呢，我们认为落实到医疗设备行业的刺激规模可能要小得多。第二，医疗设备领域刺激计划的一个执行时间表被推迟了。第三，项目出资仍然是存在一定的不确定性，尤其是地方政府和医院自筹资金的部分。那么在分析了迄今为止政府对于医疗设备采购的这个批准，以及来自中央的这个潜在的资金支持之后呢，我们近期是发布了一个报告，将2024年落实到医疗设备行业的这个刺激计划的规模预测，从之前的560亿到740亿元的这样的一个区间，下调到了140到180亿元这样的一个新的一个区间。首先呢，在项目的一个审批方面，我们的分析表明，截至到9月末，来自20个省份的项目获得了政府的审批，整体的金额约290亿元人民币。但是呢，根据我们的渠道调研，今年的特别国债将主要用于支持2类医疗机构的采购，其中就包括县域的医共体和国家卫健委直属的44家医院。那么根据我们的统计呢，这部分医疗机构经过批准的一个采购金额，实际上是差不多在90亿人民币左右。那么我们通过对这20个省份的数字进行一个线性的一个外推推到全国，那我们可以得出今年可能会获得特别国债支持的项目采购金额可能是在140亿元人民币左右。那么另外一端，我们看一下资金的支持。那根据国家发改委提供的信息呢，中央已经将发行超长期特别国债募集的1480亿元资金全面下达，用于支持各行各业的设备更新。资金的使用截止时间是2024年12月31号。为了估算分配给医疗设备更新的一个资金规模呢，我们在这1480亿元资金池的基础上，去乘以了2023年全国医疗健康支出占到GDP 的一个比例，也就是7.2%。那么我们得到有可能分配到医疗设备更新上的一个资金规模大概是110亿元。那么我们进一步假设本轮刺激计划当中约有60%的资金是由特别国债来支持那我们可以推导出本轮对医疗设备行业的刺激规模整体差不多是在180亿元。那么值得注意的是，尽管中央的资金是已经到位了，但是地方政府和医院本身的一个配套资金还是存在不确定性。尤其在今年8月和9月呢，我们并没有注意到地方政府发行新的医疗专项债。最后一点， 在项目执行的一个时间表方面，我们之前预计在本轮刺激计划下，大部分的这个设备的招投标采购将从第3季度末开始陆续启动。但是考虑到目前最新的进展呢，我们现在预计大部分的招标将在年底前进行，也就是在中央的资金支持到期之前进行。因此我们认为对于上市公司而言，可能需要等到25年第1季度才能看到本轮刺激计划对于这些公司收入带来的一个显著的一个提振。
谢谢邓军啊。如果你说到要等到25年，我们可以预计这个是那个行业的下一个要关注的点吧，就以及从中国医疗设备公司近期的一个关键的那个催化剂来讲那我们有什么值得关注呢？
好的，谢谢 Eric 这个问题。那对于我们来说的话，我们总结下来，近期值得关注的这个关键催化剂有这么几项。首先，第一点这个催化呢是这个进一步的一个财政支持。近期呢，中国财政部召开了新闻发布会，会上也提到中央财政在举债和提升赤字方面是有比较大的空间的。接下来也会合理运用好债务政策工具来促进经济的一个持续向好。如果未来还会再通过发行超长期特别国债的方式来支持各行各业的这个设备更新，也包括医疗设备的更新项目的话那么我们认为这个将对医疗设备行业整体的一个收入增长形成重要的一个支撑。那么第二个催化呢也就是今年第4季度关于招投标活跃度的一个提升那么根据我们和我们覆盖的部分上市公司的交流呢今年7月和8月的一个招投标数据相比今年2季度已经出现了逐月的一个改善，但是这个改善呢与执行刺激政策的关联度并不高，更多的还是去年医疗反腐下被压抑的采购需求的一个释放。此外需要注意的呢是部分上市公司表示，在去年反腐启动之后对于像超声等等产品来说整个行业层面呢出现了渠道库存明显升高的一个迹象因此即使我们接下来看到招投标活跃度的一个提升可能渠道去库存也会对生产厂商的这个收入增速恢复产生一定的这个压力。第3个催化呢是超出预期的全年业绩。那么具体到行业内的头部公司而言对于迈瑞医疗来讲，目前卖方对于2024年收入和盈利增长的一个预期一致预期是在10%到20%这个区间的一个中段。而对于联影医疗来说，目前卖方对于2024年收入和盈利增长的一致预期在10%到20%区间的低段。如果这2家头部企业的一个业绩超过了市场预期，那么我们认为是有助于提振投资者对于整个行业的信心。那最后一个催化呢也就是相对来讲是地缘政治相关的一个动向那么具体来说的话，可能就是欧盟的调查和美国加征关税等等地缘政治动态好于预期。那么首先呢，就是欧盟之前曾经对中国的公立医院招标的情况进行了一个调查。那这个调查呢是在2024年4月启动，我们预计会在2025年1月或者2月结束。而对于美国加征关税的情况呢，我们预计会在今年11月美国大选之后会有进一步的更新那以上就是我对这个问题的回答。
好，谢谢邓军。我看今天可能我们的讨论也蛮充分的，希望对各位投资者有帮助。以及呢，跟今天我们讨论的很多问题了，如果大家有任何的疑问欢迎你们线下找邓军以及我们团队我们的分析师进行交流。特别是呢要提醒大家现在那个 Excel 亚太的评选现在在进行。希望各位可以支持瑞银大中华研究团队包括今天来到我们线上和大家交流的邓军在那个医药行业里面。最后呢也期待在下一场的瑞银展望2025可以和大家继续交流，继续见面。今天时间先到这里，拜拜。Thank you so much, everyone. I'm not sure if Graham and Tara are still online, but Thanks for your time. Of course. Thank you, Jun and Lin. Thank you.
Thank
Bye-bye.
you, Eric. Yeah, bye-bye.